Hello, this is Barrett from BarrettWave. How's it going? Here's a new video on Apple, one of my long-term holdings in my dividend growth portfolio. So I'm going to continue the series of analyzing my holdings. And today we have Apple with quite the upside potential using the Elliott Wave theory here, as always, that we can forecast, as well as obviously fundamentals seems to be in favor of the upside. A very interesting thing that I'm sure many of you investors are aware of is how Apple is trying to transition to carbon neutral products, and in doing so, it is also involved in the establishment of solar panel throughout the world. So that is my own opinion, and I do think that it is strong evidence of what we could see Apple becoming in the future. So it's trying to focus on clean energy, and not only trying to do just the in-house hardware, but it's also starting to establish its own energy source, as well as after acquiring the MLS rights, it is also now trying to strike a deal with Formula One for global rights. That deal there are rumors of it being around $2 billion. So that being said, let's take a look at the Elliott Wave theory as we try to focus on this channel. And let's see what's happening and what could be happening. So here on the weekly chart, you can see how we seem to be having 1 and 2, very time-consuming wave 2. Again, 1, 2, and then what seems to be an extension wave 3 of cycle degree. Now, that will make sense because of, after such 1, 2, 1, 2 being so close, we would expect usually a strong extension to wave 3. Now, wave 3 target, primary wave 3, so this one here in black, if we look for Fibonacci targets of that wave 3, we see how equality has been passed at $87. And next target would be 1.618, so a textbook move into wave 3, and that would stand at around $740. So using here Fibonacci tools to establish an estimate for wave 3 of primary degree, we could expect upside all the way up to $740. And that could happen in wave 5, which we're gonna try to look into in just a second, with the assumption that wave 4 of intermediate degree is completed with the 2022 lows. So let's dive into the daily chart without wasting any of your time. So here, as you can see, we're looking for a 1, 2, and then 1, 2, 3, 4, 5 waves into wave 5, with minor wave 5 being an anti-diagonal, and then 3 waves down into wave 4. So wave 3 is just by a few dollars longer than wave 1. Therefore, we do not have wave count invalidation. Do not worry about that. And here, let's zoom in. It looks like we could be having, there we go, 3 waves down, 3 down in A, triangle in B, down in C, short wave C, which could signify that this trend is really strong. And given the fact that we are looking at Apple, such a strong company, that should not be a surprise. And then 1, 2, all the way up into wave 3. This up move seems to be just a 1 degree move, which is why this could have been a wave 4, down in A, potential triangle in B, down short wave C. So that would be a very common pattern that basically it's the same thing we're seeing here, A, B, C, with a short C that we see here in a smaller degree. So that being said, we could have a potential bottom in place, and we could start to move higher. So this, if we stick to our bullish count, would mean that we could have wave 1 of minor degree, down in 2, and then upside all the way up over $700 as our wave count suggests. Now, there is also a possibility that all these waves need to be moved 1 degree higher, and therefore this here would be a top in wave 5 of intermediate degree, and therefore we could expect a larger pullback. Is that the case? I guess we're going to find out, taking a look at other companies as well as the other market, and as well as the fundamental that I stated in the beginning of this video, despite the fact that I'm not much of an expert in those matters. But my thinking would be that we could expect from here a bottom and look towards 700. However, being an electrician, just gotta take it one wave at a time. And for the time being, it looks like we're looking for upside. And we know that after we do get, if we get this one more like higher, we should expect 3 waves down. And at that point, we're gonna find out if this downside is going to be corrective in nature, and we could expect further upside, or else we will continue to the downside. Now, full disclosure, as I said, I do own Apple in my long-term dividend portfolio, which I believe I'm going to do a portfolio reveal early in 2024, as I will try to transition this channel to combine both Elliott Wave as well as dividend investing, which I hope will bring more of you subscribers into the channel. But obviously I'm not going to forget where I came from, so I'll stick to my Elliott Wave, no worries. So if you're a subscriber because of that, don't worry at all. I'll still do my Elliott Wave analysis. So that being said, I bought around $170. Now, I do have a large position in an ETF of the S&P, and that ETF is weighted for about 10% on Apple. So I already had exposure in a way to Apple. Now I just started to buy a singular share, as I do like the count and I do like the company, which is a company I consume. I mean, I'm currently using a MacBook, so not going to be a hypocrite. I do consume Apple. Why should I invest if I believe in it? And obviously I use my Elliott Wave count for some technical analysis. So that being said, let's take a quick look at some dividend data. So first of all, as you can see here, we have Apple up 43% even year to date. So quite a remarkable performance, which beats the market by, I guess, about 30%. And then as promised, if we take a look at dividend, and precisely we go into dividend history, you can see how we have a history of increasing dividend ever since 2012, which is when the company started to pay dividends. So last increase was in May of 2023. If we take a look at dividend safety, we want to see cash dividend payout ratio as well as a cash flow payout ratio of no more than 30 to 40%. As you can see here, it is very low, which obviously gives more margin to Apple to reinvest cash. And then let's take a look at dividend growth. As I said earlier, we can see that 10-year rate stands at 8.7%, whereas a short-term dividend growth sits at around a little over 5%. So the company is currently yielding 0.54% with a forward dividend yield, which is not much, but if you think about the dividend on cost you could get, then it starts to get quite an interesting investment, as well as obviously if you're looking for capital appreciation. That is going to be it for me today. Don't forget to watch my other videos on my portfolio holdings, where I go over more dividend stocks into details, and I use the Elliott Wave theory to do so, as well as I bring you some dividend data and observation. So thanks for watching. Don't forget to subscribe if you enjoyed the content. Leave a comment on what you'd like to see next and what would be your suggestions. Leave a like if you enjoyed the video, and I'll see you in the next one.